Well, good evening, everyone. Welcome back to the channel. So I've got a really good fund in the series continuing this evening for you all. One I'm really excited about that I probably haven't talked about enough on this channel, uh, the GOF or GOF fund or Guggenheim Strategic Opportunities ETF. Now, I just looked over this in preparation for this video, and I'm really blown away at how consistent the dividend is. The fund's performance, how it hasn't fluctuated hardly at all. I mean, this one really is a cash cow. And for the last 10 years, I'm going to show you how the dividend has been the same. So let's go ahead and start the screen share. And I will show the same spreadsheet I've been doing in this whole series. So again, just to reiterate, say you're retiring or you're near retirement, you've pooled all your assets together. Say you come up with $1 million, and it doesn't have to be $1 million. It could be 100,000, it could be 500,000, or whatever, whatever situation applies to you. But I pick $1 million because it's a nice round number. It's a pretty big number, and it illustrates the power of these dividends being paid out. So if you were to invest $1 million in the GOF fund as of today, actually it's going to open up Monday at $17.10 a share, which by the way is much cheaper than some of the other ones we've been talking about. I mean, it's like a fourth of the cost of some of the other ones or less. Like the one we just talked about yesterday, SCHD, it's less than a fourth of the cost. So you would get a whopping 58,480 shares. And the math on this one is the easiest one we've done so far because it's very simple. This fund pays out 18 cents a month. So times 12, $2.18. So how much would that be? $2.18 a year times 58,480 shares would be $127,719.30. I could take that amount, and I'm sure a lot of us could take that amount as well. So monthly, again, 18 cents or 18.2 cents to be exact, your total monthly payout, $10,643.27. I have that here again for whatever reason. I guess I just wanted to say it twice. But the really interesting fact here, like I said, since May 2013, almost 10 years, the dividend has been the same. Now, this fund has been around since 2007, so over 15 years, and it's consistently paid a dividend even during the Great Recession. But it's increased 3 times. It started at like 14 cents, then it got up to like 15 cents, then they increased it to 18 cents, and it's been 18 cents ever since for almost going on 10 years. The yield for this, $2.18 per year divided by 1710, is a 12.75% yield, which is phenomenal. And again, that would produce, there's a little bit of a difference here because of rounding. So, and then these numbers here, let me take these off because what we're going to do something different today. So the fund right now is a really good buying opportunity for this fund, I believe. And I'm going to show you on Yahoo Finance because we're actually lower in this fund than we've been for quite some time. So I think this could actually be a very good buying opportunity. Now we're going to look at the expense ratio, and I think the expense ratio is actually one of the higher ones on this one, if I'm not mistaken. But if you see Yahoo Finance here, I have the dividend history up on the screen. And what you'll notice, like I say, going all the way back to May 2013, the dividend has been consistent. From April of that year to May, it increased from 16.9 cents to 18.2 cents. So you can see 10 years of dividend history here that has been the same, paying out 18 cents per month, every month for almost the last 120 months, which is remarkable. Now, if we go back all the way to 07 when it started, the first dividend the fund ever paid out was 14 cents. That lasted for about 4 months. And then when we got into 2018, they raised it to 15 cents, and it paid that all the way through the Great Recession. The dividend stayed the same, which is very remarkable. Throughout the Great Recession, the dividend did not change on this fund. And in December 2010, they paid like twice, it looks like. I guess they gave a Christmas bonus of 2.7 cents. But it stayed the same there all the way until 2013, and it's been the same ever since, 18.2 cents. So phenomenal. I mean, this could be like a cash cow in terms of dividends that you can rack in. So again, it's the Guggenheim Strategic Opportunities Fund. It's going to open up 5 cents lower tomorrow. And the expense ratio is not showing on here, but I did a video on this fund last summer, and I think it was actually one of the higher ones. If I look up, let's see, what are we doing here? I'm just keep an eye on that screen, and I'm going to look this up over here, but it's on a screen I'm not sharing. So let's see. Goff Fund. Here we go. So it should be, according to this, 2.35%. But I think this is one that's worth paying the higher expense ratio for because you're going to make up for it. And remember, expense ratio is basically the cost of holding the fund. So on this one, you're going to more than make up for it based on the solid dividend performance and the performance of the fund itself. Now, what I want to illustrate here, if we go back 5 years, the fund is actually, well, it's not at a 5-year low, but it's close to it. It's closer to the low than the high. So the high we hit briefly in 2018, $21, $22 a share. And then we came back to that in 2021 before coming back down to earth a bit. We were at like $15, then 15, and then we've come back a bit since actually the start of this year. We were really at a bottom in December. So December would have been a great time to buy, but still a great time, relatively speaking. So now with that, I'm going to go to the actual dividend fund screen. So I'm going to change the screens here again. And we're going to go to the Guggenheim Fund screen that I pulled up, which is going to be here. Share that. Okay, so here is basically the website itself. So from the horse's mouth. Closing market price as of Friday, 17:15. Premium discount, closing net asset value, distribution rate, 12.74%, very close to what we said. So let's see. They've got volume, dividend payable date, ex-dividend date. I'm looking for that because I Googled the expense ratio and I found it, but I just want to show it here on the screen. So let me do this. Here it is, 2.35%. So that one, that is a much higher one. You see here, 2.35%. But in my opinion, I think based on the performance of the fund, I think it's worth it. Now, here's total returns, 1 year, 3 year, 5 years. It's not a top performer because they're paying so much out in dividends. And honestly, I'd rather have that because it's like a guaranteed return. So you see there, kind of a middling return since 07. But again, most of it's paid out in dividends. Like I said, if it's paying 18.2 cents per month times 12 over 10 years, this fund has more than paid itself out in dividends. So if you held this the whole time and you had that many shares, you've more than made your money back and then some. And if you've held it for the full 15 or 16 years, you've way more than made your money back. So, and say some of you were really geniuses and you bought in 09 when it was like $9 a share, then you really cleaned the table with that. So that's really what I wanted to show there. Expense ratio and some other kind of less exciting facts here on the screen. Looks like we've got some live viewers. If you all want to comment, ask me questions, I'll answer them now. I want to keep this going for a few more minutes, at least. Let's see. So this so the Guggenheim site shows distributions and tax info. Yeah, I mean, every month around the middle of the month, it's paying out. Prices. And like I say, I mean, this is a good one. I'm probably going to add this one to my portfolio. I mean, there's so many choices, really, because, I mean, SVOL has a lower expense ratio, but similar performance. So you know what? Let's just go look at that one while we're at it. Go back to Yahoo Finance here. Change screens here for the 4th time. Okay, so back to Yahoo Finance. Let's see. Let's look at SVOL again, because really, SVOL I think is the most similar to this one, and the expense ratio is nowhere near. what this one is, unless there's something I'm misunderstanding. SVOL has a 0.66% expense ratio, 17% payout. It's actually 17.5% payout. It's trading at 22.33. It's going to open at 22.69 Monday. So it's about $5 higher. So you wouldn't get as many shares, but you're getting a higher dividend payout and a lower expense ratio. So this one, if I was to make a comparison, which I'll probably add to the title, because this was the first one I did when I actually started doing this series consistently. You see it's a 32-cent dividend payout every month. So 32 cents versus, what did we say here? 17 cents. Go back to the spreadsheet here. 18 cents per month. So almost double the dividend. So to compare that, and oh, commenter. Yeah, thank you. Yeah, any questions, ask away. I like to get the live viewership going here. This is always good. So, okay, let's see what else we can look at here. Oh, yeah, SVOL. So SVOL, yeah, 32 cents per month, which, like I say, is double. It's really double what the Guggenheim fund is. Lower expense ratio. Now, let's look at the performance of this one again, because this is kind of becoming like a comparison. We're about flat. We may be up $1 for the year so far. And compared to a year ago, we're down $2. So this one hasn't fluctuated too much. 5 years, we're down about almost $5. But this can come back. It can come back and keep paying out its dividend. So that one can be had cheaper. Like I say, well, it's more expensive, but the expense ratio is less and it pays a better dividend. So it's probably a coin toss. I mean, for me, I like them both. I think that's the most comparable one. Of course, I like the JEPQ a lot too, but that trades higher. So with all of that being said, if you all enjoyed that, please remember to like, comment, and subscribe. Thanks so much for those of you who tuned in live. Remember, there's that super chat feature there also. And yeah, keep an eye out for the next video. I'm going to try to keep these up daily. There's so many of these funds to discuss. I'm going to try to keep churning them out every day if I'm able to. So thank you all again. And those of you that are going to watch, which most of you will watch this after it's posted, hope you enjoy it. Thanks so much for watching. Take care.